BlackRock, the world's richest and most powerful company. BlackRock Inc. is an American multinational investment company founded in 1988 by Larry Fink, Robert S. Capito, Susan Wagner, and several other partners. Initially focused on enterprise risk management and fixed income institutional asset management, BlackRock has grown to become the world's largest asset manager, with $10 trillion in assets under management as of December 31st, 2023. BlackRock services include investment management, asset management, risk management, mutual funds, and exchange-traded funds, specifically the iShares group of ETFs. Headquartered at 50 Hudson Yards in Midtown Manhattan, New York City, BlackRock operates 78 offices in 38 countries and serves clients in 100 countries. Alongside the Vanguard Group and State Street, it is considered one of the big three index fund managers. The company's Aladdin software monitors investment portfolios for major financial institutions, and its BlackRock Solutions division provides financial risk management services. History. 1999 to 2009. On October 1st, 1999, BlackRock became a public company, selling shares at $14 each via an initial public offering on the New York Stock Exchange. By the end of 1999, BlackRock was managing $165 billion in assets. BlackRock grew both organically and by acquisition. In 2000, under the direction of Charles Halleck, BlackRock launched BlackRock Solutions, its analytics and risk management division. This division grew from the Aladdin system, the enterprise investment system, Green Package, the risk reporting service, PAG, portfolio analytics, and Answer, the interactive analytics. In August 2004, BlackRock made its first major acquisition, buying State Street Research and Management's holding company, SSRM Holdings Inc., from MetLife for $325 million in cash and $50 million in stock. This acquisition increased BlackRock's assets under management from $314 billion to $325 billion. The deal included the mutual fund business State Street Research and Management in 2005. BlackRock merged with Merrill's Investment Managers Division, MLIM, in 2006, halving PNC's ownership and giving Merrill a 49.5% stake in the company. In October 2007, BlackRock acquired the fund of funds business of Quellos Capital Management. In April 2009, BlackRock acquired R3 Capital Management, LLC, and management of its $1.5 billion fund. In May 2009, BlackRock Solutions was retained by the U.S. Treasury Department to analyze, unwind, and price the toxic assets owned by Bear Stearns American International Group, Freddie Mac, Morgan Stanley, and other financial firms affected by the 2007-2008 financial crisis. The Federal Reserve allowed BlackRock to superintend the $130 billion debt settlement of Bear Stearns and American International Group. 2010 to 2019. In February 2010, to raise capital needed during the financial crisis, Barclays sold its Barclays Global Investors Unit, which included its exchange-traded fund business, iShares, to BlackRock for $13.5 billion, and Barclays acquired a near 20% stake in BlackRock. On the 1st of April 2011, BlackRock was added as a component of the S&P 500 stock market index. In 2013, Fortune listed BlackRock on its annual list of the world's 50 most admired companies. In 2014, BlackRock's $4 trillion under management made it the world's biggest asset manager. At the end of 2014, the Sovereign Wealth Fund Institute reported that 65% of BlackRock's assets under management were made up of institutional investors. By the 30th of June 2015, BlackRock had $4.721 trillion of assets under management. On the 26th of August 2015, BlackRock entered into a definitive agreement to acquire Future Advisor, a digital wealth management provider with reported assets under management of $600 million. Under the deal, Future Advisor would operate as a business within BlackRock Solutions. BlackRock announced in November 2015 that they would wind down the BlackRock Global Ascent hedge fund after losses, The Global Ascent Fund had been its only dedicated global macro fund, as BlackRock was better known for its mutual funds and exchange-traded funds. At the time, BlackRock managed $51 billion in hedge funds, with $20 billion of that in funds of hedge funds. In March 2017, BlackRock, after a 6-month review led by Mark Wiseman, initiated a restructuring of its $8 billion actively managed fund business, resulting in the departure of 7 portfolio managers and a $25 million charge in the second quarter, replacing certain funds with quantitative investment strategies. By April 2017, iShares business accounted for $1.41 trillion, or 26% of BlackRock's total assets under management, and 37% of BlackRock's base fee income. Also in April 2017, BlackRock backed the inclusion of mainland Chinese shares in MSCI's global index for the first time. 2020 to present. In January 2020, PNC Financial Services sold its stake in BlackRock for $14.4 billion. In March 2020, the Federal Reserve chose BlackRock to manage 2 corporate bond buying programs in response to the COVID-19 pandemic, the $500 billion primary market corporate credit facility and the secondary market corporate credit facility, as well as the purchase by the Federal Reserve of commercial mortgage-backed securities guaranteed by Government National Mortgage Association, Fannie Mae, or Freddie Mac. In August 2020, BlackRock received approval from the China Securities Regulatory Commission to set up a mutual fund business in the country. This made BlackRock the first global asset manager to get consent from the Chinese government to start operations in the country. In November 2021, BlackRock lowered its investment in India while increasing investment in China. The firm maintains a dedicated India fund through which it invests in Indian startups Byju's, Paytm and Pine Labs. On the 28th of December 2022, it was announced that BlackRock and Volodymyr Zelensky had coordinated a role for the company in the reconstruction of Ukraine. In April 2023, the company was hired to sell $114 billion in assets of Signature Bank and Silicon Valley Bank after the 2023 United States banking crisis. In June 2023, BlackRock filed an application with the United States Securities and Exchange Commission to launch a spot Bitcoin exchange-traded fund, and in November 2023, it filed another application for a spot Ethereum ETF. The spot Bitcoin ETF filing and 10 others were approved on the 10th of January 2024. On the 19th of January 2024, the iShares Bitcoin Trust ETF was the first spot Bitcoin ETF to reach $1 billion in volume. In July 2023, the company appointed Amin H. Nasser to its board. In August 2023, BlackRock signed an agreement with New Zealand to establish a $2 billion New Zealand dollar investment fund for solar, wind, green hydrogen, battery storage and EV charging projects as part of its goal of reaching 100% renewable energy by 2030. In January 2024, BlackRock announced that it would acquire the investment fund Global Infrastructure Partners for $12.5 billion. BlackRock agreed to pay $3 billion in cash and 12 million of its own shares as part of the deal to buy GIP. In March 2024, BlackRock launched their first tokenized fund, the BlackRock USD Institutional Digital Liquidity Fund on Ethereum, which represents investments in US Treasury bills and repo agreements. The fund secured $245 million in assets in the first week.
Finances. In 2020, the nonprofit American Economic Liberties Project issued a report highlighting the fact that the big 3 asset management firms, BlackRock, Vanguard, and State Street, manage over $15 trillion in combined global assets under management, an amount equivalent to more than 3/4 of U.S. gross domestic product. The report called for structural reforms and better regulation of the financial markets. In 2021, BlackRock managed over $10 trillion in assets under management, about 40% of the GDP of the United States, which was nominally $25.347 trillion in 2022.
Influence and power. Due to its power and the sheer size and scope of its financial assets and activities, BlackRock has been called the world's largest shadow bank by The Economist and Basler Zeitung. In 2020, U.S. Representatives Katie Porter and Jesus Chi Garcia proposed a U.S. House bill aiming to restrain BlackRock and other so-called shadow banks. On March 4, 2021, U.S. Senator Elizabeth Warren suggested that BlackRock should be designated too big to fail and regulated accordingly. BlackRock invests the funds of its clients, like the owners of iShares exchange-traded fund units, in numerous publicly traded companies, some of which compete with each other. Because of the size of BlackRock's funds, the company is among the top shareholders of many companies. BlackRock states these shares are ultimately owned by the company's clients, not by BlackRock itself, a view shared by multiple independent academics, but acknowledges it can exercise shareholder votes on behalf of these clients, in many cases without client input. BlackRock has been the subject of conspiracy theories, including the conspiracy theory that BlackRock owns both Fox News and Dominion voting systems, which Snopes described as false and PolitiFact described as mostly false. Some BlackRock conspiracy theories have incorporated anti-Semitism, such as the conspiracy theory that Jewish people, including BlackRock founder Robert Capito, are part of a cabal responsible for COVID and a COVID agenda. Common ownership. Common ownership is when competitors within a market are commonly owned. In other words, these competitors can have the same powerful shareholders if their shares trade publicly. Common ownership has the potential to cause harm because it reduces market competition, which can be bad for consumers and the economy. In response to a widely cited research paper that showed that common ownership raises prices, BlackRock issued a white paper calling the mechanism vague and implausible. At the same time, the research's findings were listed as a risk in BlackRock's annual report. Common ownership can also lead to higher pay for CEOs, even as competition between the firms is reduced.
Environmental, social, and corporate governance.
In 2017, BlackRock expanded its environmental, social, and corporate governance, or ESG, projects with new staff and products. BlackRock started drawing attention to environmental and diversity issues by means of official letters to CEOs and shareholder votes, together with activist investors or investor networks such as the Carbon Disclosure Project, which in 2017 backed a shareholder resolution for ExxonMobil to act on climate change. In 2018, it asked Russell 1000 companies to improve gender diversity on their board of directors if they had fewer than 2 women on them. In August 2021, a former BlackRock executive who had served as the company's first global chief investment officer for sustainable investing said he thought the firm's ESG investing was a dangerous placebo that harms the public interest. The former executive said that financial institutions are motivated to engage in ESG investing because ESG products have higher fees, which in turn increase company profits. In October 2021, the Wall Street Journal editorial board wrote that BlackRock was pushing the U.S. Securities and Exchange Commission to adopt rules requiring private companies to publicly disclose their climate impact, the diversity of their boards of directors, and other metrics. The editorial board opined that ESG mandates, which also carry substantial litigation and reputation risks, will cause many companies to shun public markets. This would hurt stock exchanges and asset managers, but most of all, retail investors. In January 2022, BlackRock founder and CEO Larry Fink defended the company's focus on ESG investing, pushing back against accusations the asset manager was using its heft and influence to support a politically correct or progressive agenda. Fink said the practice of ESG is not woke. BlackRock's emphasis on ESG has drawn criticism as either bowing to anti-business interests or being merely marketing. In a talk at the Aspen Ideas Festival in June 2023, BlackRock CEO Larry Fink said he has stopped using the term ESG because the term has been weaponized. According to an Axios reporter, Fink said, "I'm ashamed of being part of this conversation." Later, according to Axios, Fink said, "I never said I was ashamed. I'm not ashamed. I do believe in conscientious capitalism." In July 2023, BlackRock announced that it would allow retail investors a proxy vote in its biggest ETF from 2024. The move was initiated in the context of claims from US Republicans that BlackRock is systematically trying to push a woke agenda through its pro-ESG activities.
Investments in contributors to climate change. As of December 2018, BlackRock was the world's largest investor in coal-fired power stations, holding shares worth $11 billion in 56 companies in the industry. BlackRock owned more oil, gas, and thermal coal reserves than any other investment management company, with total reserves amounting to 9.5 gigatons of CO2 emissions, or 30% of total energy-related emissions from 2017. Environmental groups including the Sierra Club and Amazon Watch launched a campaign in September 2018 called BlackRock's Big Problem, claiming that BlackRock is the biggest driver of climate destruction on the planet, due in part to its opposition to fossil fuel divestment. In 2019, climate activists carried out street theatre and glued themselves to the door of the company's London offices. On January 10, 2020, a group of climate activists rushed inside the Paris offices of BlackRock France, painting walls and floors with warnings and accusations on the responsibility of the company and the effects of global warming. In May 2019, BlackRock was criticised for the environmental impact of its holdings, as it was a major shareholder in every oil supermajor, except Total SA, and in 7 of the 10 biggest coal producers. On January 14, 2020, the company shifted its investment policy. BlackRock CEO Larry Fink said that environmental sustainability would be a key goal for investment decisions. BlackRock announced that it would sell $500 million worth of coal-related assets and created funds that would not invest in companies profiting from fossil fuels. Nonetheless, BlackRock's support for shareholder resolutions requesting climate risk disclosure fell from 25% in 2019 to 14% in 2020. BlackRock has also been criticized regarding climate change inaction and deforestation in the Amazon rainforest. According to the New Republic, BlackRock has positioned itself as the good guy on Wall Street, and its executives as a crew of mild-mannered money managers who understand the risks of the climate crisis and the importance of diversity. But those commitments, critics say, only extend so far into the firm's day-to-day operations. However, according to ISC, BlackRock has indeed influenced polluting companies to lower their carbon emissions. The study showed that companies who met with BlackRock's CEO Joshua Fink had lower CO2 emissions the following year.
Investments in gun manufacturers. In May 2018, anti-gun protesters held a demonstration outside the company's annual general meeting in Manhattan. After discussions with firearms manufacturers and distributors on April 5, 2018, BlackRock introduced 2 new exchange-traded funds, ETFs, that exclude stocks of gun makers and large gun retailers such as Walmart, Dick's Sporting Goods, Kroger, Sturm Ruger, American Outdoor Brands, and Vista Outdoor, and removed the stocks from 7 existing ESG funds. BlackRock study on integrating ESG into banking rules. The European Ombudsman opened an inquiry in May 2020 to inspect the Commission's file on the European Commission's decision to award a contract to BlackRock to carry out a study on integrating environmental, social, and governance risks and objectives into EU banking rules, known as the Prudential Framework. European Parliament members questioned the impartiality of BlackRock given its investments in the sector. US states refusing to do business with BlackRock due to ESG policies. Riley Moore, the state treasurer of West Virginia, said in June 2022 that BlackRock and 5 other financial institutions would no longer be allowed to do business with the state of West Virginia because of the company's advocacy against the fossil fuel industry. In December 2022, Jimmy Patronis, the chief financial officer of Florida, announced that the government of Florida would be divesting $2 billion worth of investments under management by BlackRock due to the firm's move to strengthen ESG standards and ESG policies. BlackRock later responded to the announcement with a statement stating that the divestment would place politics over investor interest. In October 2022, Louisiana removed $794 million from BlackRock due to the company's support of ESG and green energy.
Criticism of investments in China. In August 2021, BlackRock set up its first mutual fund in China after raising over $1 billion from 111,000 Chinese investors. BlackRock became the first foreign-owned company allowed by the Chinese government to operate a wholly owned business in China's mutual fund industry. Writing in the Wall Street Journal, George Soros described BlackRock's initiative in China as a tragic mistake that would damage the national security interests of the US and other democracies. In October 2021, non-profit group Consumers Research launched an ad campaign criticizing BlackRock's relationship with the Chinese government. In December 2021, it was reported that BlackRock was an investor in two companies that had been blacklisted by the US government, accusing China of human rights abuses against the Uyghurs in Xinjiang. In one case, Hikvision, BlackRock increased its level of investment after the company's blacklisting. In August 2023, the US House of Representatives Select Committee on the Chinese Communist Party initiated an investigation into the firm's investments in Chinese companies accused of violating human rights and aiding the People's Liberation Army. The committee concluded that BlackRock channeled $1.9 billion into blacklisted entities in 2023.
Ties with Federal Reserve. BlackRock was scrutinized for allegedly taking advantage of its close ties with the Federal Reserve during the COVID-19 pandemic response efforts. In June 2020, the New Republic wrote that BlackRock was having a very good pandemic and was casting itself as socially responsible while contributing to the climate catastrophe, evading regulatory scrutiny, and angling to influence a potential Biden administration. The Financial Times described BlackRock as having secured a prominent advisory role in the Fed's post-COVID asset purchase program, prompting concerns over whether BlackRock would use its influence to encourage the Fed to purchase BlackRock products. During the Fed's 2020 quantitative easing program, BlackRock's corporate bond ETF received $4.3 billion in new investment, compared to the respective $33 million and $15 million received by BlackRock's competitors, Vanguard Group and State Street. On May 26, 2020, the contract was released publicly. The New York Times wrote about the contract that Blackstone will earn no more than $7.75 million per year for the main bond portfolio it will manage. It will also be prohibited from earning fees on the sale of bond-backed exchange-traded funds, a segment of the market it dominates. Investments in cryptocurrency. As of 2024, BlackRock operates the world's largest Bitcoin fund,